This conference will now be recorded.
Okay. Did Michael happen to pop in? Because he just sent me a text message.
He didn't say anything.
Okay. So let me look at the roster and see who all we got. We got me, got Alan, got Gary, got John, got Todd. We had Jenny, but we lost her. Now, Alan's on mute. John, you're on mute. And Todd, you're on mute. So if you guys do want to speak, this is an open mic impromptu session. So feel free to unmute yourself and you can talk. The reason when we have like the workshops and when we have the training room in the morning, the reason, because we've tried in the past over the years, when you get more than 5 people in a group and everybody has an open mic, inevitably somebody forgets their mic's on when they have to go to the door because the postman's here, and pretty soon it's a cacophony of sounds. So I know it's a little aggravating to have to do all that typing, but the fact that you can now speak and have your words appear on the screen via the software built into Windows 10 makes it a little less aggravating. So you guys may have popped in here just because of the novelty, or you might have an actual question. If there's something I can answer for you, help you with, then by all means, I would be more than happy to do so. Now, Alan, you're going to be, I think, the first name on that new list. And so that will come to you Monday mornings, 6:15 a.m. Eastern, because we'll have by next Monday, we'll have the list built and we'll have it coordinated to go out with the partner list that has the zones for the week.
That sounds great. Thank you.
You betcha. And I can't stress to everyone enough the importance of, now I usually do this for the benefit of the radio audience. I say on Thursday when I show the zones to everybody, I encourage people, hey, you might want to jot these down for next week. Michael and I, we used to keep track, I think 2 weeks back, but it got so then we cut it down to 1 week, and even still your chart is filled with so many lines that it can be disconcerting, to say the least. But as an example, I'm going to flip back to last week, not this week. I want to see where price is sitting right now. Price is sitting at 28.57. Now, the closest zones last week are 63 and 64, right above. And then we've got
39 and 40
50,
below.
We got, well, last week we got 50 and 51. Okay, so what day was this? This was today. So today at 10:30 a.m. Eastern, price came down and put in a low at 28.51.50. And last week there was zone 28.50/51. So that kind of gives you an idea right there. That's a real good example for us of having the previous week along with the current week. But like Michael and I found out, you got to make sure it doesn't end up just becoming a bunch of, stuff on your screen, conflicting, confusing. You don't want it to. You want it to help more than it hurts. So 28.51. This guy down to 50. Oh, yeah, way down here. Okay, 28.50/51. Okay, that's last week. Now, okay, so right about 1 a.m. this morning. In fact, I should shrink this up so that we can go back to the Globex Open last night. And that would be the Globex opens this green candle. So usually what I'll do on my charts is I'll put this vertical line. So that's the final candle on Friday, 30-minute candle. And this is the first candle of the Globex open. And so it was immediately attracted to last week's zone at 50.51. Then above that is 63.64. Now again, those are last week. So there's no guarantee it's going to go there, but there's never any guarantee. We've got a little double top going. But if we take out this slightly higher high on a leg up, then I would say there's a very good possibility that we are going to head that way. Now, above 51.60 last week, we had 63.64. So I'm going to just drop 63 right here. Yeah. Now, let me glance at this week's. Okay. Now, we have, I think, some folks that aren't members, some folks that are just visiting, because I threw out an open invitation to come to this pop-up. So, that's just a couple people. Not that, I guess it's no big deal. So below 50.51. This week, this is another example of kind of like what we had last week. 48, 40. Sometimes they'll be miles apart, and other times they'll be right next to each other. Has to do with how the week opens and closes. So let's see, 48, 49. So I'm just going to put this at 48. And so what this does, if you got 48, 49, and then you got 50, 51, it just, and I think I referenced this in one of the LOGIC247 commentaries last week, it really blocks off a pretty good portion of your chart. And so for price to trade below this area to get through this week's zone, well, first it's got to get through last week's zone, then it's got to get through this week's zone. That takes some doing. However, we are talking about a decline, and all that needs to happen for a decline is for people, buyers, to stop buying. For price to rise, it requires financial commitment on the part of the buyers. The reverse, for the market to decline, does not take financial commitment. All it requires is that buyers just kind of throw in the towel and go, you know what, we've been fighting this all day. Let's just step aside, let them have their way, and we'll buy it. If we're long at heart, we'll just buy it back at a cheaper price. So a cheaper price is always a good thing, a better price if you're a buyer. If you're a seller, of course, you want higher prices to get in, and then lower prices to get out. So we know we've got this battle below us. Now overhead, we've got 63, 64. That was last week. And okay, all right. So this is a little different because we got some space between them, which actually creates an even larger area. Now, Alan, I don't know on when he forwarded you the zones, the email he sent you, was it just the zones, or did it have that little bit of commentary down below them about Googling the weekly trading zones? Did he happen to send you that part too?
No, it was all, they were all in a line, just scrunched together, and they said count 1, count 3, count 4. I
Right.
assumed he took people copied it off something because it didn't
Well,
make any sense to me.
let me show you. Let me show you how to deal with that so that it'll make sense. I knew that was going to be an issue. I just didn't have a chance to figure out a solution last night, but I'm going to show you right now. Okay, so if we put this week's immediate area zones and last week's zones below us and the same above us, is it any wonder that we traded? Look at the range that we traded in today. Now, these are last week's zones and this week's zones, last week's zones and this week's zones. And look what we did today. Boom, 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 boom. Could we do that all week? Yeah, sadly we could. Hopefully we won't. It's going to take the buyers really stepping back to get below this area. The buyers are going to have to really, step up and make some commitment to get us above. Now let me go find that email. One second here. I know I got it. I think I got it. Oh, somebody talk, say something. Ask a question, tell a funny joke while I'm looking for this. Weekly trading zones and links. Okay, that's what I wanted. Okay, I'm going to drag this up so you can see it, Alan, and whoever else it applies to. And anybody else that's catching a view of it as a freebie, well, God bless you. Okay. You know what? I need to forward this like that so I can actually work with it. Okay. We have an app, Alan, that when we put this string of numbers in, what it does is it creates these lines on our chart for us. And the zones used to look different until one day Michael said, you spent a lot of time on that. Why not just put the string? Because that's what the people need, is the string. And if you have the app, that's true. So let me show you. This says count 4. So what you do is you go 1, 2, 3, 4 slash 1, 2, 3, 4. Enter. Now you just got to come and go slash enter slash enter slash enter slash enter slash what did I do? Oh, I forgot the slash. Okay. So now, does that look a little more legible, Alan?
Yeah, that makes sense.
Highest weekly zone. Okay, and so now on the Dow, the count's 5. So you're going to go 1, 2, 3, 4, 5 slash 1, 2, 3, 4, 5, enter. And then just repeat that process all the way down. Russell's 4, Crude's 5, Gold's 4, the NQ's 4. Now, this information down here over the last, did he send you this too?
No, I didn't get any of that.
Okay, let me send you this. Over the past few months, I've gone to extra links both on the radio show and in print to explain the concept of using the tools available to triangulate the trades, which are both high probability and low risk. With 8
Alex
markets.
D'Andrea and I are looking to be paired every Saturday, or as many Saturdays as you would like, to work some tackle football. Could you contact me, 847-239-2366?
Hello.
I would like to talk to you about this
Dr. Dean.
opportunity.
Hello? Dean. Wasn't that Dean? Dean, you're welcome to join us but I think you might have been on the wrong line. I didn't want you to give out any personal information if you didn't know you were publicly speaking. Okay, so that's kind of, with open mics, that thing happens. All right, with 8 markets nightly and 2 trade ideas per market, the sheer volume of triggers each session are more than one person can trade. The best practice is to use the tools listed below to separate the wheat from the chaff. With a firm understanding of the process, some patience, and a lot of self-discipline, you're able to monitor multiple markets more easily. It becomes evident to you rather quickly the quality of one setup over another. Knowing that each day will bring a multitude of opportunities allows you to relax, see the market with a calm mind and spirit. You become, over time, as adept at reading the chart as a newspaper or a mystery novel. The weekly zones are used both in our rules-based trading, also in our discretionary, big picture, and swing trades. Most of the info below relates to both styles of trading. The CTAs are recapped each day on the live broadcast after Michael's recap of the live training room. And there are many years of recaps on the Concierge and the trading room at youtube.com/CFRN. And this link, I'm having an issue with Cloudbrick and Cloudflare, my name servers. Long story I won't bore you with, but I got to get that fixed. So let me see if I can turn on the images. I'll just go back up here. Still doesn't show the pictures. Display images, there we go. Okay, so Alan, after you read this, then you're going to come to this, the CTAs, blah, blah. Okay, triangulation. I just copied that right off the internet. Tools at your disposal, or the CTAs, multiple time frames, confirm or conflict with number 1. CFRN primary indicator set, use that for your risk management, trailing stops, end of trend warning, exit signals. The weekly trading zones, targets and no trade areas, unlimited one-on-one training. Someone has to teach you. Below are a few links from Google about our weekly trading zones, articles, posts, charts, and videos going back to December 14th of 2009. That's when we first publicly published them. Digest this info, and I believe it will help you better understand why the weekly zones are important and why you should care. This message tonight is important and timely, as a number of partners have inquired of late about being grandfathered in. Okay. Now, down here, I will copy and paste this. I don't know if it'll paste into the chat box or not, but if it fits, I'll put it in there. What are the weekly zones and how do I use them? I Googled these up for you, okay? I just Googled CFRN weekly trading zone, so you could Google that yourself. And back came random charts, articles, blog posts, videos, I grabbed an assorted variety of stuff, but again, you can do your own Google search. And this just kind of gives you a better idea of, like it said, why the zones are important and how to put them to the best possible use. So let's see if this fits into that little chat box. And if it doesn't, I'll put it somewhere else. Chat. Enter your message to everyone. Control V, enter. Yeah, looks like it worked. The last one on the list. Let's see if it got them all. No, it did not. It looks like the last one it caught was twitter.com/CFRN. Where is that one? Pinterest, then Twitter. Okay, there's Pinterest. I need a Pinterest followed by a Twitter. Let Well, I'll just grab it from the bottom and do it again, and then you'll have them all. Again, that's all publicly available information. It's out on the net. Just gotta guess where to go look for it. Okay. All right. Purpose of this pop-up was I was sitting at my desk. I know I'm stuck here for an hour. I've got quite a bit of work to do, but I thought, you know, if somebody has any questions, now's as good a time as any. So if you have a question, I have the go-to meeting set up so that everyone can unmute their own mic if it's muted. If you have a question, speak up. If you prefer to type it into the chat box, please do. Either way, I'm not here to do a presentation. I don't have any flashy, what do you call those, the little templates or cards that, you know, you normally see at a webinar. I just, yeah, I don't do that. I could, you know, but I don't. So if you got questions, Alan, are you good to go? Do you have everything that you need now?
Yeah, I'm good. I appreciate it. And I love the zones. You know, I've been watching them for years with you, only getting them Wednesday or Thursday whenever you would.
I know.
You know, and I did pester you a lot on Wednesdays to get them early. But
I've been trying to figure out a way to get you in with the zones, and by golly, I figured it out finally. So
yeah, no, I'm really excited about it.
Now, do you know how to sign up for a one-on-one mentoring session? Because
no,
you qualify for that too. Now,
okay.
I'll just put it in the I'll put it in the chat box. If you are not a CFRN partner, if you are not a member of LOGIC247, then you get one 45-minute personal mentoring session to ask me any questions that you want, and I'll try to teach you whatever I can during the 45 minutes. If you're an active CFRN partner, or if you are a active member of LOGIC247, then you have access to unlimited one-on-one mentoring. All you have to do is go to the address that I'm about to type in, cfrn.net/emini personal mentoring. Enter. Okay. So if you are active, that link right there, you have unlimited access. You just got to book it 12 hours in advance. And for those of you who are not yet a partner or an active member with us, you get one session to find out if maybe you want to be, right? You can take the free trial in the live training room. You can get all your questions answered there on a daily basis. But above and beyond that, if you want some one-on-one time to ask questions without having to type, talking the way we are now, that's the address. CFR, it didn't light up, I guess, because I didn't put the HTTP in front of it. But it'll work. Okay. Now, like I say, I didn't come to teach. So if there's questions, I'll answer them. If they're not, I'll sit here with my headphones on and I'll go about my work that I normally have to do this time of day. And when somebody does voice a question, I'll be happy to try to address it, bring up a chart, whatever the case might be. Not ignoring you, just letting you know. By the way, we invented pop-up Q&A today. You and I together were groundbreakers. The original OGs, or no, OPs, that's it. We're the original OPs. So does anybody have a question? Because I'm going to start focusing on my work, but I'm happy to answer a question if you got one. In fact, I'll put that on the chart. If you have a question, I'll just type it up here. Anybody else that pops in?
I have a question, Dwayne.
Absolutely.
Looking on here, I don't see where you posted the links. Where do I go? Where do I hit on here to look at those?
You know,
Did you email that to me?
No, your control panel is a little different than mine. So could someone tell him on the control, on you guys' side, does it say chat? There's some little thing you click and it opens up a chat box.
What I have is across the top of the screen, I've got an icon, an ampersand, a microphone, a screen, a camera, and a little arrow that says it's like a diagonal arrow. If you press on that, it should open up the chat window for you.
Yeah, I found it. Thank you very much.
You found it?
Yeah.
Perfect. Okay. Now I see that someone typed in or CTA. I guess that's part of a previous question. Let me scroll up. Any special pricing for the LOGIC247 for partners or CTA? Absolutely. Yes. If you're already an active partner or if you already received the Concierge Trade Alerts, send me an email. Tell me what you're involved in right now and if you're interested in the annual or the lifetime, and we will put something together. And we've already got it put together. I'll have Michael email it out to you. So here's what you do. You email support@cfrn.net and just put current partner question. And that'll trigger my brain to know exactly what you're referring to. Current partner question or current member question. And then put your question down in there. You know, I'm a partner for so long, or I've been getting the CTAs, or both for a period of time. What sort of an offer do you have available before the prices change? And we'll get you squared away. I apologize about my internet today. That was what a Monday. I mean, you know, some Mondays are Mondays, and then some Mondays have a capital M. Today was one of them. Now, one of our members, partner and a L24 member, he might be here. Neil, are you here? Are you in here right now? He's putting together a spreadsheet for us, similar to the one that Michael has, but different in the respect that what's on Michael's spreadsheet is what happened during that 2-hour period of time with Michael and the markets. Okay, it goes back 5 years, every day, every trade, every stomp out, everything. Because the LOGIC247 service operates in a completely different way, it's not tracking what any one person did in any 2-hour period of time. It is tracking what happened with the alert from the time it was issued until the time it was given a final recap status in the channel. And everyone has access to the original 3-week beta test and the recap channel and the discussion. So those links are available everywhere, but just give you an idea. Hang on. Okay, during the 3-week beta test, there was 113 alerts. 26 were no trigger, which I think is pretty self-explanatory. It was an alert and it just did not trigger. That left us with 87. 113 minus the 26 that did not trigger, there were 87 left. Of the 87 left, 51 reached their final destination. Some of the alerts have just one target. Some have 2 or 3. In the rare case, they might even have 4. Okay. If it's in the full column, then that means 51 of them reached the final target, whether it was just one target or 4. Then under the partial, there were 15, and that means it reached either the first target. It was a multi-target alert. It reached the first target, or if it was a one target alert, it reached a minimum of 60% of that target. And then so there was 51 full target, 15 at least the first target, no trigger 26, stop out 21, total of 113 alerts, which gave us 87 actionable alerts. 87 we could actually do something with. And so now you can go to that channel, anyone that hasn't been there. In fact, I'll grab the link and put it right here in the box in case you don't have it. Manage channel info. Okay. All right. Chat box. You got to have Telegram installed, which is, it's really some amazing software. It's very secure. It works really well. The link I just sent through, that is the original beta as it played out, alert, by comment, by poor joke, by, whatever. It's all there. Now, I learned some things about Telegram during that 3 weeks. I learned a couple days in that I could recap inside the same box that I put the alert out, which was a blessing. Well, 2 days later, I learned that if you wait more than 2 days, then you can't. So you have to reply to the original message. You'll figure it out as you work your way through there. Now, as you work your way through there, it's really important, I think, for you to get some charts so that you can go back and look at that particular alert, not just in words on a page, but see how it actually came about and unfolded. I think that will benefit you greatly if you do that. If you take I know it's time consuming, but I think it's worthwhile. Now, the next link I'm going to give you, hang on, here we go. This one is the original beta test recap. What this is, I went back when the beta was over and everything had already been recapped in the beta test as we went along. But because it was a little disjointed, I went back and I grabbed just the final recap of each alert and put them in a separate channel. Now that channel is actually a discussion group. You can actually, have a chat in there. It's also set up so that if you're in the beta test channel and you're looking at alert number 24, if you open the recap channel and go to number 24, you can go, oh, okay. Then you go back to the original and you're right where you left off. So you go down, down. Now you got a question about 32. So you click back over to the recap channel and boom, it's right there. So it's pretty convenient how you can, ping pong back and forth between the two, and keep in mind that this was spread out over a 3-week period of time, 15 trading days. The first week, there were 10 alerts. Second week, there were 32. And the third week, there were 71. Part of that was me getting adjusted to the technology. Part of it was a function of the market activity at the time, which gave us the total of 113, of which 87 were actionable because 26 were no trigger. Now, some of the no triggers, as you go in and read, if you take the time to read through all of the notes and comments, some of the no triggers were never expected to trigger. I come upon these rare instances where everybody's fishing off the same side of the boat. It's pretty obvious what everybody expects to happen next. That's why everybody's on the same side of the boat. The boat's all lopsided. Well, I'm going to go around to the other side of the boat, and I'm going to put my hook in the water. I'm not really expecting to catch a fish, kind of, because obviously the fish are all on the other side of the boat, right, where all the people are. But lo and behold, if I happen to catch one, what happens then? All the people come running over to the other side of the boat. Now, I didn't run their stops, by the way. That's just a bunch of hooey. But their stops did get triggered. Not only did their stops get triggered, they also want to get on the profitable side of the street. So that accelerates the move, whether it's up or down, and we benefit. So if it seems like 26 no triggers is a high percentage, keep in mind some of them, I didn't expect them to trigger from the beginning, but if they do, woohoo. And there's a really great example in there where I go into a lot of detail about the final 30-minute candle, I think on Crude. I even provide a chart. And if you study that, you'll start to go, oh, I see what he means. Yeah. So it's all pretty self-explanatory. But again, go through it, make notes as you go through it, good notes. Then book a free mentoring session with me, and I'll be happy to go down that list with you one by one and answer the questions as best I can. Now, a bunch of you have showed up. Bill, I see you just came in. I'm not teaching today. I'm explaining, I'm answering questions. Everybody has the ability to unmute their own mic, I believe. Yeah. So if you have a question, ask it. I'm going to be at my desk working, taking care of stuff I have to do this time of day, every day. So just speak up and go, hey, this is Raymond from Toledo. And I'll say, hi, Raymond. Or everybody will say, hi, Raymond. And then I'll try to answer your question. I'll put down what I'm doing and answer your question. In fact, I've had these headphones on so long all day, I'm going to kick it out to the speaker so that I don't have to wear the headphones. I still got the microphone hanging here from the boom from the radio show. Hey, how you doing? I haven't heard from you in a long time. You okay? Doctor. I've been meaning to call you, but time's short. Let's see. There we go. Okay, I kicked the audio out to the big speakers. Hopefully that works. Somebody give me a test because I'm taking my headphones off.
Test. Can you hear me now?
Yeah, I still hear you through my headphones though. Yeah, you're coming through. I don't understand why I didn't kick it out to the TV or the flat panel. I guess I'll just leave my. Boy, I sure switched it. Let's do that. So, did somebody have a question? I'm happy to answer it while I figure out my.
Dwayne, I typed my question. I don't know if you had a chance to.
That voice sounds familiar, but let me go.
It's Bill from Calgary.
Hey, Bill, how you doing?
I'm doing fine. How are you doing?
Good. I'm scrolling up. How long ago did you type that? Good while ago?
5:57.
Okay. Can you explain what percentage? Yes. Is that the one? I find it?
That's the one, yes.
Okay, because it's 4:57. What time zone are you in?
I'm in Mountain Time.
You're in Mountain. Okay, I should be in Mountain, but I'm in Pacific because Phoenix, we don't do daylight savings time.
Okay.
Can you explain what percentage of these alerts are during the regular trading session? Well, you know, based on the name 247, that's just 24/7. It's whenever I see opportunity. I'm in front of the screens way too often, and we are. A lot of this is going to become automated. I just haven't got all of that completed, but I'm not looking to particularly put them out on Globex more or the day session more. What I would suggest to get a good idea, maybe go through and just take a look at the timestamps in the original. Have you been through the original beta test?
Yeah, I think it was the tail end of it and the last half
Okay,
of it.
well, the whole 3 weeks are there. And if you hover over the bottom right-hand corner, it tells you when the original message was typed, the original alert, and then any edits like the recap or the final recap. It will also show you what time those were done. I'm going to say that between the hours of 12, no, let's back that up, from 11 a.m. Eastern to 2 p.m. Eastern is probably when you'll see the fewest number of alerts. That's probably the best answer I can give you, because during that time, I'm finishing up the live training room. I'm doing the 1 trade a days. I'm doing the daily double, and then I'm doing the radio show for 2 hours. Then I try to take a little break, and then at 4 p.m. Eastern, that's when the mentoring sessions start. Oh, you know, that's a good question you asked, because I can clearly see that there's times I should kind of block off. When I'm in mentoring sessions, 4 to 4:45, and then 4:45 to 5:30, there will probably be no alerts from 4:45. Oh, wait, hang on. From 4 Eastern to 5:30 Eastern. 4 p.m. to 5:30. Yeah. 4 p.m. Eastern to 5:30 p.m. I'm writing this down because this is literally getting carved in stone right now. If I'm in a mentoring session with someone and together I and that person spot something extraordinary happening, I would send out an alert. But chances are you won't see alerts during that time frame. Same goes for the radio show. Now, the radio show is 12 to 2 p.m. Eastern, but I have a lot of work to do before the show starts. So we're going to block out 11 a.m. to 2 p.m., just 3 hours, 11 a.m. to 2 p.m. Now, again, if during the course of the radio show, as I'm recapping some of the other alerts or teaching or answering questions, if I stumble upon something that deserves to be alerted, I call it a live radio trade. And we probably do a couple, maybe 3, I don't know, live radio trades a week. And that would go out as an alert, and then it's just a giveaway to whoever's in the audience. So from 11 a.m. to 2 p.m. Eastern and 4 p.m. to 5:30 p.m. Eastern are times when you should really not be expecting alerts. If you got to go to the eye doctor or the DMV or something of that nature, go during those times. The other times, I'm getting my kids off to school from, see, my time starts at about 6, so probably 8 a.m. Eastern. No, that's not right. Yeah, because it's 5 a.m. here. And then she leaves at 7:30. 8 a.m. to 10 a.m. Probably not a lot of alerts then. But I keep the pipeline full. In other words, if I know that I'm going to be away, then, you know, I take a look and a second look and maybe a third look to see, you know, what opportunities are approaching. Okay. And some of the alerts, when they go out, they're imminent because the market just did something perhaps unexpected. Now, if it's so close, I won't even bother alerting it if I know you can't get, you know, if you can't get to a computer to place the trade in time, then there's no sense even making the alert. Does that make sense?
Yes.
Now, again, this will change over time because part of the process is being automated, and I'm training. So I'm training some people to work with me. Okay. So that, I hope, answers your question. It's a long-winded response to a short question, but I had to think through it. It's the first time somebody asked that, and I'm glad you did, because at least I have a sort of a framework here to look at. Okay, does anyone else have any questions? Now, we just finished we had the 3-week beta, and then took a couple days rest, and last night was, no, a week ago last night was the official kickoff, and last night began the second week, and then I ran into my internet issues this morning. But the first week, I'm not going to really go into the numbers right now because I have someone doing that on us. I'm having like an independent third party do that and put it on the spreadsheet. That'll be available, I think, in the next couple of days. I can say this.
Wayne, it's Russell.
Hey, there you are. We've been talking about you behind your back.
Yeah, I hear you. Hey, check your email. I've got a couple of questions for you just on a couple of the setups. So if we can follow up after this tonight, it'd be great.
Yeah. I promised these folks I would be here till what time? What time did I say I was going to be here till?
Midnight.
No, I did not. Come on.
Just kidding.
Let's see.
Probably an hour, no?
Yeah. Hey, Sean, are you here? Sean W. I think we missed something. Oh, no, that's a different Sean. What? All right. Well, I'll deal with that later. Let me look at Russell's email. Which we have. Anybody need a dog?
No, not a noisy one.
Or 4 or 5?
While you're looking for that email,
yeah, I got it. I've got it right in front of me. It says, here's what I have for the beta.
Yeah.
Okay, let me open it up.
Are you wanting to keep track of every trade to be able to use similar to what Michael does in the live training sessions for future reference, or are you just wanting to have a document for the beta test so you can show people in the future?
Oh, I hear somebody going, Dad. That's never a good thing. Hang on, I'll be right back. All right, sorry about that. Turns out, no big deal. Okay, back to you, Russell. I'm just noticing here, hang on, still checking. Tell me what you think is the, you asked me a question if I wanted to do this or that. What do you think is the best thing to do? Okay,
Here,
go ahead.
let me go back and look at the email. I forgot what I asked.
See, the CTA just triggered on the S&P for those inquiring minds that might want to know. And if you're in it,
I think it also triggered on the Russell, if I'm not mistaken.
oh, did it? Okay. Yeah, the Russell.
I wish I would have got in on the Russell.
Let's see.
About the last week's zone, I believe.
Let's see if I can get one, if I can squeeze one more tab out of this thing. They used to give me 20 because they're nice, I guess. Hey, Mr. Pinto, how are you? I had no idea that a pop-up Q&A would be so popular.
Anytime we can talk to you, it's very popular.
Oh, come
Mr.
now.
Wizard.
Oh, my. Oh, make an old man blush.
Fountain Hills Gary brown-nosing you, of course.
All right, this is the Russell 30-minute. Now, what did we say on the Concierge? Consider being short 1697. So it did trigger, okay, and it should be making a beeline for the zone.
You got last week's zone there, don't you?
Let me look.
1695, 1696, is that last week's zone?
Let me go there. Russell last week, 95.96 was the zone last week.
Yep, I got it highlighted there.
Okay, which, I must have seen something. I was doing my analysis. I saw something extraordinary, or I might not have. Well, I always double check it, so I'll go back and see what was special about it. But now this week, oh, where are we? So really the target I'm looking at on this one, I think, is 92.
On the Russell?
Yeah, I mean 97 and 95, that's good. There's nothing wrong. In fact, it would, if I were going to do it as an L24, which is the shortest way I know to say LOGIC247. I'm just going to call them L2s, I think. I don't know. I should have thought that through. So it triggered at 1697. And then we had a zone 95 to 96 last week. So 97 to 95 to moving forward this week, 92. Yeah, I think that.
What's your target on the ES with the Concierge Trade? Is it last week's zone?
Let me tell you just 1 second. Okay, so yeah, here we got a first target, a second target, and a final. I mean, well, when I say, like, if it's only one target or if it's if there's 3 targets, I'm always assuming that on that final target, there's a reason, like you just said, it's a zone or something, but also be prepared if a sudden momentum move were to kick in the direction of your trade. You would want to stay with that if at all possible.
Right.
Like, let's say, okay, so 92 is the trigger. I'm 97, and then 95, and then we just decided 92, okay? So let's say as you're approaching 92, the final target, instead of it slowing down and the candles getting smaller, imagine you're speeding down the road, you start putting on your brakes. So it's slowing down, the candles are getting smaller, and all of a sudden out of nowhere comes this burst of energy that pushes price like right through that targeted area. You know, it's like somebody turned the momentum back on. That's one you definitely want to try and trail it as far as you can, because it's going to go to the next important area, which in the case of the Russell is probably going to be the next weekly trading zone below. And that would be, you know, you might pick up another 8 to 10 points if that were to happen. Okay. Also, when that happens, it allows you to bring the indicators into play, and it allows you to keep yourself in trades that you would have, you know, let go of otherwise a long time ago. Let me see if I can show you an example of that. I know that we had a few last week. Well, okay. I'm gonna make this work just so we don't have to go hunting around. But let's just say that you had a trade alert that said to consider being long at 1688. The target was 1692. That'll work. It's just for example purposes only. So from 88, or where are we at? 86, 88, 88 to 92. That's a nice 4-point trade. And so I think most people, myself included, you know, until more recently, I'd be very happy to take that 4-point Russell trade. I mean, once it goes over the finish line there, ding, ding, right? I mean, however, if you lay your indicators on, here's what you're going to see. Number one, you're going to have your slingshot below, and I'm pretty sure it's going to be blue. And when you got blue on blue, that's about as strong as it gets. We call it that because we don't have anything better to call it. Blue on blue. Okay, so you were presented with a trade that said consider getting long 1688, target 16. I thought I said 92. I meant to put it there. Consider buying 1688, target 1692. That's a nice 4-point trade. Okay, now you see how this candle just powered through the target? This is a 30-minute candle. You see that? Okay, can you see my chart? Hello. Did I just lose everybody?
Yes.
Okay, so you do see it. All right. So this is just a perfect example for what I'm trying to get across. So the alert says $16.88 to $16.92. Okay. So you got your hard target there, and all's looking good. And then this thing just kicks in. And why in the world would we want to get out at 92? The step line is on the north side of the CFMA1, which is where you want it on a long trade. You got blue on blue. Remember, these are measuring completely different things. And but we're not going to get out at 92. It looked like a real good idea back at 88, but now something's up. So you'll notice right about here, the step line finally gets on the back side of the CFMA1. Now you see how we start to get these small bodied candles, say a little doji. See that 30-minute and that 30-minute, they look a whole lot different, don't they? This is the vehicle decelerating. You know, you put on the brakes, it's slowing down. Okay. Now, the step line crosses to the south side of the CFMA1. Okay. The next thing that's going to happen, this is your early warning signal. Right here, price is going to start walking sideways. It's been walking up. It went leg, retrace, leg. And instead of just giving a retrace and another leg, it starts walking sideways. The first candle that closes on the back, on a long trade, on the first candle that closes, the first red candle that closes, on the back side of the CFMA1, below the step line, your exit just went from being the alert I gave you, 88 to 92. You got out here on the first exit signal, and that price was, that candle closed at 96.8. So you're picking up almost an additional 5 points by doing nothing except watching the chart until the chart tells you it's time to get out. First red candle below the step line. Once the step line gets on the, and am I saying that this process repeats itself over and over and over? Yes, it does. Does it always play out identically? No. No. The markets do the same thing every day in a slightly different way. So I had a beautiful trade. I'm looking to take 4 points out of the Russell, feeling good about life. And then all of a sudden, the market hands me this incredible gift of kindness. And so am I going to get out here? Why? Am I going to get out here? No. Ooh, this big red candle, that should make you want to get out. Not as long as I'm still on the north side of the CFMA1 and we haven't done the perp walk or the sideways walk or whatever you want to call it. And then I start to notice, okay, doji, yeah, they're not quite so sure of themselves now. Doji, small candle, walking sideways, red close, below the step line. Waiter, ticket please. And so again, we were able to, without being superhuman, we were just able to be patient. And that really is a superhuman trait, to learn to be patient in your trading. So that closed at 96.8. So that added an additional 4.8. So it doubled. It doubled what you could take out of that trade. Now, because we're looking at it on a little bit larger time frame, I mean, that all, it just makes perfect sense. You dial this down to the smaller time frame that we often will use to get our entry, like in the live training room. There's no way you could have stayed in this trade on the range chart. That range chart is your best bet for an entry, okay, intraday. It's surgical precision almost, but it is not the perfect tool for staying in what turns out to be almost a 9-point Russell trade, which would be $450 per contract. And again, you didn't have to be terribly clever or smart or work harder. You just had to be willing to be patient and let the market tell you, we need your table, get out. Does that make sense?
Yes.
Okay. You sound, that yes sounded like there was a question mark on the end of it.
Oh, no. The yes was, I understand what you said. Now I'm ahead of you, or I'm looking at the yes right now and the 30-minute, and that's why I said, yes, I understood what you were saying on the Russell. Now I'm looking at the yes.
Okay, so we'll kick this to the curb. Where's my select all box? I don't see it. Well, you know what? We'll just do it over here. Oh, I don't want to mess that up. What's your question?
No, I'm in the.
I just went to. I went to the ES. Okay, I'm on the ES chart right now. And what is it we want to know? Tell me.
I'm in the trade. I'm watching the candle. That's all.
Oh, you're watching. Okay. So you got short at 28.55. The low
Yes,
so
sir.
far has been 53.75, right?
Yep.
So, all right. And I think I said this earlier when somebody asked, I would probably set my target on this one at 52. Now, 51 is a hard number for a reason. It was either this week's zone or last week's zone.
It was last week's zone.
Last week's, okay. And so then 50.51 was last week. Now this week is 48.49. Yeah, I mean, at 52, you've got 3 points in the trade. And again, I would be prepared to stay with it. You know, have your hard target in place, or you might push your hard target out a little bit farther, knowing that at a second's notice, if you need to, you can grab that hard target. What platform are you on? Trading platform?
DT.
Okay, so then you can just grab it and you can just drag it down to like a tick or two in front of price. It's now pulling back. We triggered at what, 55?
Yes.
So at 55, you had at 53.75, you had 1 1/4 or a point and a tick profit. Now you're almost back to break even, right?
Mm-hmm.
Now I wrote about this the other night, and I talked about this on the radio program. We watch price channel back and forth all day long. Let me get rid of all this stuff. We watch price channel back and forth all day long in the markets, and we accept the fact that, you know, hey, that's the way it is. That's how it works. But the second that we get into a trade, suddenly we don't want price channeling back and forth. We want it to move in a straight line, a beeline, right to our target. And that's not realistic. And that causes a lot of angst. Yeah, angst, the perfect word. Causes a lot of angst. So let me make this ES. Okay. Now, see what we're up against here on the 30-minute?
Yep.
Bearish cross. And so with a bearish cross, we would expect that price is going to pull back to the BBC. And so this is going to take a while. Do I think you're in any danger right now? No, because you're crossing there. Your step line's already crossed. So we had a situation here. We got a head fake. Well, let's see. We got a bullish cross. Nice leg, and a retrace. Price always reverts to the mean. In this case, the mean is BBC. Bull bear cross, and then a leg and a retracement, a leg and a retracement. Now, we did put in a slightly higher high here at 60.75, and this was 60. So put in a 3-tick higher high. But this really is kind of looking like a rounding top to me. I don't think we're going to see higher prices prior to the London Open. Now, let's take this down to our range chart for just a moment. Range 2, 3, 4. Okay. Wow, much different picture, eh?
Yep. That
might even make you feel a little better. I don't know. So you were in Now, here's another thing too. Now, I do teach people this in the one-on-one mentoring sessions, but it's not something I get into publicly that much because it takes time. But when you've got that entry on the Concierge at 55, now That has to do with reasons that obviously I have not, made public. That's just not part of the thing. But okay, he had a good reason for that. So what if I, as we're approaching 55, this thing pulls back, get it down close. See, what's the open of this candle? This opened at 56.50. All right, it opened at 56.50. Could you get in a little ahead of the trigger? Well, I'll tell you what, if I was looking at this and I knew that my Concierge Trade Alert entry was at 55, given this thing is turned. See, this was the transition, 4-tick range, made the turn. So might I possibly, just me personally, I'm not saying anyone else should do this, but me personally, might I look at that tail? And if I didn't do this one, then I don't know if I could stop myself from doing this one. So if I entered at the open of that candle, 56.25, by the time we get to the trigger, I've already got a 1.25. So 1.25 plus 0.25, 2.5. And I think we're just getting wound up here at the moment. What I'm noticing too is that on this pullback, if it continues in the manner that we think it's going to continue, there's enough momentum in the market that price couldn't do the full pullback. When you miss the full pullback by just a little bit, then you got more downside pressure than you do buying pressure. And so in my head, I factored that into the equation. So obviously we're going to get an answer here relatively soon. Now something else that you can do, just grab your guy right here and do this and do this. Now this is nothing but math. There's no trading technique or anything involved here. Just pure, just like we do Fibonacci retracements, this is Fibonacci price extension.
Which icon did you press on to get that one?
The little guy with the A. It might not, it probably doesn't default on, so you got to go down here, right click it, and then click configure, and then go to drawing tools, then go to Fibonacci price extension.
Ah, okay.
And then go to image. You just want the image, you don't want the text. Then you got to grab it and drag it and drop it over there. Drop it over there. Apply, okay, and boom. So based upon this pullback right here, price has already done, got between the 38 and the 50% price extension. We can, number one, we do not know what's going to happen next. That's rule number one. And we have to not only say it, believe it, we got to write it on the tablet of our heart. We don't say it just to make the teacher happy or the boss happy. We realize at a gut level, we don't know what's going to happen next. Now, we can, talk smart and act cocky, but we don't know. So we're gonna it's like watching a movie, how's it going to play out? I know that it's a business based on probabilities. I know that I've done everything I know how to do at this point to put all the probabilities possible in my favor. But you walk into a casino in Vegas, and I hate the gambling analogies, but my friend Mark did such a beautiful job of using it in the book Trading in the Zone. And anyone that doesn't have a copy of Trading in the Zone by Mark Douglas, come to the radio show tomorrow and I'll give you one. A legal copy that his widow gets her royalty on. I will give you one, no charge. We know that we have, just like the casino, when they open that casino, they write the rules to put the odds in their favor. So with our trading, we create trade setups where, well, if this happens and this happens, and oh yeah, right, and if this happens like it's going to happen, then the probabilities have definitely swung in our favor. And so we're patiently stalking. I got that from my buddy Mike Reed. We're stalking the market until that little deer wanders out into the clearing. Like, oh my gosh, now do I have to shoot him? I'm not a hunter, so the answer is no there. Are you tracking with me?
Yes.
Okay. If you book a mentoring session, I'll be happy to go a little deeper and unpack it. All right. So the only thing, if you know, some people need something to worry about. I mean, their life's just not complete if they ain't got something to fester over. So if you want something to fester over, you see how the CFMA1 has turned up and turned blue?
Yep.
That could be support. Okay. Down here in the slingshot, the cycle has turned blue and starting to look up. So if you want to give yourself a nightmare, you can picture price punching its way through and going like that. And since we don't know what's going to happen next, that could happen, right?
Yep.
Could. We don't want it to. That means you got to stick around and trade some more. That's the only thing standing in your way right now is that. Okay. And then once you have a candle close on the other side of that CFMA1, which right now I think it would take at least two more candles, and things have gotten quiet. You notice how suddenly things got real quiet? Let's pop up some volume. All right, in the last 30 minutes, we traded 586 contracts. This current 30-minute candle, which still has 15 minutes left, we've traded almost 500, okay? That tells me that there could be, I don't like the term professionals. Sometime when you don't have anything better to do, Google define professional trader. I wrote that years ago, but it seems to hang out at the top of that Google search page, define professional trader, because I think as retail traders, people get sold short an awful lot because they're not a professional. You know, they're not in the in crowd, they're not on the memo list. But there's an awful lot of volume exchanging hands right here, and it's not, got a lot of volume. See, now we're up almost to 1,000. That's double the previous 30-minute candle. We still got 14 minutes left in the life of this candle, and the candle's barely moved. It's almost like somebody said, hey, meet me up at the corner at quarter till. I got a bag of those S&Ps in my trunk. You bring me some of those Benjamins, we'll do business, and nobody will know the difference. You with me? Does that happen in the real world? Do institutions, do funds, do banks who need to come out of one position to get into a different position, do they arrange things like that? Yeah. Is it illegal? Absolutely not. Not at all. Because they don't know that they're going to be able to pull it off. You know, some Yahoo like me might come waltzing in and upset the apple cart and do something that throws a monkey wrench in their prearranged agreement. Okay, now we're pressing. Now we're pressing. All right, but look, see what happened here, over here, as we pulled back. See, this was a big red candle right here. This looked for all the world like it was done. And then it popped back, boom. One of the, in the private mentoring sessions with the CFRN partners, people exiting before their hard stop gets hit is probably one of the biggest problems that are issues that people wrestle with. We have an 8 in the live trading room where everything is rules-based, unlike the discretionary trading that we're talking about here. With the rules-based trading, it'll draw back 4 ticks, 5 ticks, and people just they hit the sell market button, which costs you money. To hit the buy market and sell market, it's always going to cost you at least 1 or 2 ticks a slip. You should put Scotch tape over those buttons so you can't ever press them. There's other ways to get in and get out. So, you know, it's drawn down 5 ticks. They get out. It draws down another tick, 6. Then it turns right around, does exactly what they thought it was going to do. You know, it goes in the direction of the original trade idea and hits the target or more. It's so important that if you're going to trade a rules-based method, you have to be consistent in your behavior so that you're allowing the rules to work in your favor, not against you. Because someone who does what I just explained, they're actually using the rules set they paid for and learned, they're using it against themselves. Yes, sometimes it will really come all the way back 8 ticks and stop you out. But the good news is that's the worst that's going to happen. Unless it's a fast market and you get slipped a tick. But okay, well, it's coming back in our way now. I talked you through it. I got you in off the ledge, hopefully. You get a close below the step line, then you'll get a close below the trigger, then you'll get a close below that little spot of blue. In fact, by the time we close below that CFMA1, if we do, the CFMA1 will probably turn red, just as it did. See how you got this little flash of blue here on this pullback? If this comes down, if this closes here, if this rolls over, oh, okay, the other obstacle that you have is this low here. Right? I talked about this being your only obstacle. But really, this low, I mean, the market, it fell very nicely to this point, but we know at some point it's going to retrace. And we watch it all day, leg retrace, leg retrace, leg retrace, until we get in a trade, and then we just want it to go in a straight line. We get aggravated and frustrated, constipated. Somebody's got my phone tapped. There's a camera in here. They know when I get in, when I go short with my one contract, they know, and they come after me. Sit down with a calculator sometimes and destroy that urban myth about they ran my stops. Think about the money it would cost to move price across the board to reach a specific price to do someone harm who got short with 10 ticks or 10 contracts or 50. Well, it's not reality. So there's a lot of that stuff out there. The locals run your stops during lunch. Yeah, that might have been true a little bit when there was a pit and people actually still took lunch. Okay, now we're back to biting our nails again. Okay. Now let's do this. And then I think I'm going to have to end this because I realize now that there's no way I'm going to get work done and talk at the same time. So, but I'm glad I was able to help you anyway, a little bit. Now, on the 30-minute chart, do you feel as nervous? I mean, the prices are still the same. You know, your hard stop is going to be the same. I don't know where you put your hard stop. And I don't know what time frame you used to arrive at your hard stop.
I use the 5-minute, and the stop loss is 28.57.78.
$28.58.75.
28.57.75.
57.75. Okay, right there. So that's your hard stop. Okay. So this thing would have to, you know, you on the 30-minute, it's, you can see this thing really has its work cut out for it before it comes up and stops you out, right?
Right.
So anytime that you're up on that, because right now all we did was just important prices, important areas are almost always tested. That's all we've really done here is to come back and test that. Let me drop it back to the 4. Yeah, I mean that's what the market does all day long. Pulls back and gives you a leg, and it pulls back, it gives you a leg. We never attempt to sell the high or buy the low. We're just not that smart. Once a move is underway, however, our goal is to just, take a bite out of the middle. And as we take the bite out of the middle, if the market conditions are such that we can like catch a free ride, on the momentum that all these other people created when they ran over to your side of the boat, awesome, ride it. And because I really try to get this through to people, you spend a lot of time and treasure getting into these quote unquote picture perfect trades. But yet most of us, myself included, until I really worked at myself on this, once we get a little green on the board, man, we just want to, ring the bell and, feel good about ourselves because we got a green P&L. When in fact, we don't have to sacrifice a green P&L. We just have to be aware of our surroundings, know where key things are on this 30-minute, okay? Now, if this thing were to start curling up, I would have my concerns, okay? I would be thinking, well, this, we know that some trades are going to get stopped out. That's just the truth about trading, and there's no escaping that. And if this turns out to be one of those, it's just another trade. Doesn't define who I am or who you are as a man, as a trader, as anything. Anyone who has not read, consumed, absorbed Trading in the Zone by Mark Douglas, the late great Mark Douglas. He was one of the good guys. He really was. And I miss him. But anyway, come to radio show tomorrow, and I will give you a copy of that book. And that book literally changed my life. It did. People told me that it would, and I didn't believe them. So 2 years later, I got such a thick head, I finally broke down and read it. Out of desperation more than anything, I think. And it really did. Now, I've had other people, very few people, but I've had a couple people go, I'm like, well, then you need to go read it again. Just keep reading chapter 7 until, the light bulbs go off. Because if you don't get that, maybe this isn't for you. And I don't ever mean that in a bad way to someone, but hey, I'm never going to be the CEO of GE. Let's face it. I'm not cut from that cloth. And I'm okay with that. And not everybody is going to end up trading for a living. The best thing you can do is put it to find out. Find out if this is the cloth you're cut from. Do what I teach you to do. When you step up to the plate, you got to swing the same every time. Even if the last 5 trades got stopped out, you got to swing the exact same way. Because the smallest sample size you can work with is 20, and you got to gut it out. Whether you're in sim, well, if you're looking for your definable edge, you better be in sim, okay? But 20 trades is like the minimum sample size to know if you have something, or if you're going down a blind alley. All right. Anybody else got a question? If I don't close this thing down, I won't get the work done, and then the people will come with pitchforks.
Thanks for your time, Dwayne. It was a great session.
Yeah. Anytime you want to, any of those things we discussed.
I'm going to book a mentoring session. Yeah.
There you go. You took the words right out of my mouth. Okay. Anyone else? Real quick, your mic should be open. If you can unmute it or type it in. And if somehow you couldn't figure out how to type it or unmute it, and you want to spend some time one-on-one, support at cfrn.net. And just, Dwayne, I was in that pop-up today, and I would like to get together. Santosh, good to see you, my friend, and thank you for your kind words. You are always a gentleman. Okay. Hey, Scott, you just showed up, and we're just bailing, man. Do you have a quick question? I did record this session. If anyone who spoke out loud does not want their voice on the internet, you should email me, support@cfrn.net, and tell me, or you can tell me now, and then I'll just trash it. I just thought I might have said something beneficial to help somebody, so I recorded it.
No,
but your
you did.
last name will never be used, so.
Oh,
Is
so
it
you got
okay?
my permission.
All right, buddy. Okay, Scott, we've been at this for a while. I'm sorry you showed up late, but because a number of people did show up, and most people kept quiet in the back seats, it's okay. I can see where this might actually be beneficial, so I think I'm going to try to do it maybe once or twice a week. If Michael were here, he would say, Dwayne, stop overcommitting yourself. And I'd go, yeah, you're right. So, but I still might. All right, guys, I love you. And if I don't see you at the bell, I'll see you on the radio. Take care.
Dwayne, it's Russell with a quick question.
Hey, Russell, you want me to call you right afterwards?
Yeah, that's fine.
Is that better for, or you got my number? Just call me right now and I'll answer. Okay?
Right. Sounds good.
All right.
Bye.